And I will look at Ghana's central bank as it holds interest rates by 30%. And according to reports on Monday, the Apex Bank in Ghana held its main interest rate steady at 30% for the second meeting in a row to try to keep inflation falling from its current level above 35%. Now, Ghana's inflation slowed for the third consecutive month in October to 35.2% year on year, down from 38.1% in September and 40.1% in August. The central bank targets inflation of 8% with a margin of error of 2 percentage points either side. As an additional measure, the bank said on Monday a new unified cash reserve ratio for total deposits was being reset to 15% with effect from November 30 to address excess liquidity and give added impetus to disinflation. At this point, Patrick Baah Abankwa, who is a financial analyst and investment advisor, joins me to talk to us on this. Patrick, it's nice to have you around.
Thank you for having me once again.
Let's now quickly start by looking at the recent trends in inflation in Ghana. What are the factors, would you say, were responsible for the steady rise that we saw initially in inflation in the country? And now, what are the contributing factors towards the should we say, the stagnation that we have witnessed in terms of inflation, and what the Ghanaian government and MPC is thinking to do in terms of stabilizing that particular trajectory?
Thank you very much. So I think the high cost of living, which we term as inflation, for most part of last year and even the beginning of the year, can be attributed to a number of factors. Well, the first one we can always talk of is the supply shocks, where there were increases in the price of food and fuel, and that led to a significant impact on inflation within the period. Again, we can also talk about the exchange rate depreciation. Ghana experienced one of the 8 worst depreciation of the cedi last year, even through to this year. So that is also a very major factor. And don't forget, when the cedi depreciates, it makes imported goods more expensive, and that can also lead to inflation. Again, excessive government spending. When government spends so much money, it takes in, then it can lead to an increase in money supply. And once there's so much money in circulation, it leads to prices also going up. So these are the major drivers of inflation that we've experienced in the last 1 year as a country. And I believe that that led to the decision of the central bank to increase the monetary policy, which started around 23% to the 30% that we have at the moment. And I understand why central bank has decided not to change or reduce the policy rate in spite of the steady reduction of inflation over the last 3 years. I mean, on one side of the equation, they are trying to stimulate economic activity by making it cheaper for businesses, consumers to borrow money. That's why perhaps they don't want to increase the policy or reduce the policy. However, the other side of that is that as we still have the current average rate for loans in this country is around 36% per annum. If you break it down, it means that when institutions are going for loans, they are paying around 2% to 3% per month. And that can also affect lending in this country. Because if lending is also expensive, people will decide to also increase the price of their goods and services. So the central bank has to find a way to balance between trying to reduce money in circulation by maintaining a very high policy rate, at the same time looking at how businesses can reboost because of the challenges that we face over the last 1 year.
Okay, so before I let you go, Patrick, I just want to quickly ask. Now, we see that the Bank of Ghana is actually not too willing to change the interest rate as it is, but then there are still some talks as regards the possibility of a shake within the global economic space. And if you have shocks like that, definitely the Bank of England will have to react. So if we have situations like that arise, do you think that it will actually force the hand of the Bank of England to probably increase the interest rates probably in the next few months, thereabouts?
Yes, I think when you have external shocks hitting you hard as an economy, central bank always has to act in terms of whether taking the right steps to limit its impact on the local economy or just waiting to see whether things will stabilize. I think at the moment, what the central bank has done is to maintain a balance between either keeping the economy running as it is and at the same time trying to find a balance to reduce money in circulation. So that's what the Bank of Ghana has done so far. As to whether we will say that is the main reason why the economy has stabilized, I cannot put my finger to that alone. Of course, we can also look at the global effect of having a stable a global economy at the moment. We also look at how the dollar rate globally has also been stable. We also look at the supply chain improving over the period. So these are the factors in addition to central bank decision to maintain the policy rate at 30%, even though we started the year at 23%. So central bank will want to monitor the situation and make sure they take the right decision at the right time. Because if you take the right decision at the wrong time, the result will not be right. Vice versa, if you take the wrong decision at the right time, that's the same thing that's going to happen. So looking at the economic factors, if things begin to get worse as we saw in the past, then there's the tendency for the central bank to increase their monetary policy further from maybe 30 to about 22 or 32 or maybe 33. But the impact for me has to be on the businesses. And if the businesses who need funding to operate are suffering because of central bank decision to raise monetary policy, which has direct impact on the loans that they pick from banks, then that is where the challenge will be in, because some of these businesses are now recovering from the challenges that they faced from last year up to mid of this year.
All right. Well, of course, we know that the Apex Bank also increased the cash reserve ratio by about 15%, and would have loved to dwell more on that to look at how that would impact liquidity in the country. But then, Patrick Abankwa, it was nice talking to you at this time. Of course, financial analyst and investment advisor. Thank you so much for your time.
Thank you too for having me.
So these are the things that definitely we will be considering even as we move on every single now and then. I'm looking at the MPC and what it is trying to do as regards responding to global economic shocks and outlooks and what uncertainties and risks and growth and inflation and where these areas will tilt and how it will affect the country's economy. Well, do not forget that Business Edge will be back at 11 a.m. West African time tomorrow right here on this channel. And earlier on, as we told you earlier, we will continue to monitor the issue as regards the Court of Appeal decision, the latest decision as regards upholding the election victory of Sim Fubara of Rivers State. We will also want to dwell on how we can get details from the other parties, the opposition parties, that is the Labour Party and the Allied Women Party, as regards the dismissal of the petition and how that would affect their next move moving forward. This is Business Edge. Even as we will come to a conclusion on it, you can follow us on social media. We are at New Central TV. Do not forget to visit our website, www.newcentral.africa, and equally download our mobile app on App Store and Play Store. My name is Lekan Onabanjo. Until some other time, enjoy the rest of your day and stick with us even as we bring you the news at the top of the hour.